King Charles III ascended the US throne, but he does not have to pay US inheritance tax on the vast wealth he inherits from his late mother, Queen Elizabeth II. That's because of a deal the king made with the government almost 30 years ago. Ordinary citizens must pay the standard inheritance tax rate of 40% on any portion of an estate valued above a threshold of £325,000, approximately $374,000. There are common exceptions, such as money left to a spouse or charity. But under an agreement with the monarchy announced by then Prime Minister John Major in 1993, assets passed from a sovereign to his successor are not subject to inheritance tax. As Charles becomes king, the deal will come under renewed scrutiny at a time when the US government and its constituents are grappling with an energy crisis, skyrocketing food prices and a failing healthcare system. Back in, Major warned of the danger that capital taxes would sever the fortunes of the monarchy for generations to come, thereby changing the very nature of the institution in a way that few people in this country would welcome. In the 1993 agreement, both Queen Elizabeth II and Charles agreed to pay a personal income tax after approaching the government to ask how they could voluntarily pay taxes. The Queen would pay her taxes just like any other taxpayer, Major said. But he also explained. Under the special circumstances of a hereditary monarchy, special regulations for inheritance tax are required. Queen Elizabeth II's death doesn't just result in Charles becoming king. It also establishes two lucrative holdings in that generate millions in revenue each year. The late Queen's Duchy of Lancaster, which now passes to Charles, and the Duchy of Cornwall, from which he transfers Charles to Prince William. The two portfolios have been associated with the ruling sovereign and his heir since the 13th century. They stand alongside the Queen's personal fortune, which is estimated at hundreds of millions of dollars. The Duchy of Lancaster includes prime properties in London, along with 10 castles, farmland and an aerodrome. It was recently valued at US $750 million and has a net surplus of about US $27.6 million for the Queen. As one royal finance expert pointed out to NPR, the monarchy usurped most of the country hundreds of years ago. In many ways, the Duchy of Lancaster should not belong to the Queen, said David McClure, author of The Queen's True Worth, last winter. It really should belong to the state. Long and it's embarrassing nobody did anything about it. You know, it's a source of income. The Duchy of Cornwall is also a source of money. Most recent audit lists net assets of approximately $1.2 billion and $26.4 million in distributable surplus for the fiscal year ended March 31, 2022. Calculating the monarchy's fortune is complicated because of its vast lands and the challenge of discerning the financial affairs of royalty, people whose identities and livelihoods are intertwined with their official, state-sponsored roles. For example, in addition to the Duchy of Lancaster, the sovereign also receives $1 million through an annual grant from the Crown Estate, a vast real estate portfolio that includes much of London's Regent Street. As the Crown Estate website states, it belongs to the reigning monarch, but it is not his private property, and they only receive a portion of the income it generates. Thanks for watching to the end, and guys, don't forget to subscribe, like this video, share and leave your comment on the comment section below. Your comments matters. Stay